This conference will now be recorded.
Welcome everybody to another edition of Webinar Wednesday. My name is Carlos Garcia, founder and CEO of GAR Capital. As you already know, we do this every Wednesday for you guys. Adjust my screen. This is Webinar Wednesday, open format, no real subject matter. If you have a question about entrepreneurship, question about finances, question about personal finance, markets, trading, long-term investing, options, stocks, commodities, talk about Forex, let's do it. I'm ready to go for you guys. So type away your questions here. We're going to be on for a little bit until I deem we're good at answering other questions. It was a really good webinar last week. We had a lot of questions, so I'm ready to rock for you guys. Let's kill it. So let's go with the first question. Ben asks, is it better to trade under an LLC individual, pros and cons? LLC is your best bet because you'll have tax benefits, obviously. So again, you get to write off if you trade from home, your home office. If you trade in the office, obviously you have expenses you can expense out. I prefer you have an LLC just to have the write-offs and the benefits of it. It's always best to have an LLC. But talk to a tax professional of anything. Salama, I'm gonna butcher that name, I'm sorry. What about gold long-term? I think gold long-term is garbage. I think gold is terrible. I think if you wanna take a look at gold long-term, let's take a look at it compared to the S&P. You could see here, this is just an hourly chart. Let's bring up a monthly chart. Again, not much going on, barely up. I mean, double. Yeah, I'll give you double since 2007. The S&P has outperformed that. Stocks have outperformed gold. This is the GLD, which is the ETF for gold. Not a fan of it. I mean, unless you're an older individual who wants to just hedge and just keep money to themselves and in a sense to protect their portfolio, yeah, I'm okay with having 10% of your portfolio in gold. I'm okay with that to hedge against inflation and any kind of market movement. It's a safe bet. But if you're younger, stay away from gold. You don't need it. You don't need it, honestly. It's not a good investment, in my opinion. It's not meant for growth. It's meant for just preservation. If that's the case, I'd rather you just be in dividend stocks and just earn the dividend. Because gold, you're not getting anything. If you really, really want to own gold, guys, I always say jewelry. If you're interested in gold, gold coins are kind of a waste. Just stick to jewelry. I mean, that's the case. I'm not a huge fan of it, personally. Sorry about that, but just not a fan. Okay, next question here. Getting a lot of texts and emails here, just making sure that everyone's all good. All right. Any other questions here? Let's talk about the markets today. Federal Reserve rate hike today. We expected that 25 basis points. We talked about that, but again, we're expecting another rate hike in December. Markets did go up. If you want to go ahead and look at the S&P 500, SPX today, and I'm going to go and bring up a 15-minute chart. You could see just right after he spoke today, a nice little plunge from 29.22 to 29.05. Not a huge move. Again, down 0.33% for the day. Nothing crazy. Powell was just talking about getting away from an accommodative policy, meaning it's not going to be a dove meaning keeping rates low, not hiking anymore. We're going to get another rate hike in December. Again, we're hiking rates because the economy is doing better. Bottom line, the economy, we have low unemployment, jobs are out there, plentiful, stock market is up, GDP is up. I mean, what more do you want? You can't hold zero rates forever because inflation goes up. So again, inflation eats your earnings and everything like that. So again, you want to make sure the Fed are economists. They know what they're doing in a sense. Is it the best thing for stock traders? Not really, because they'll hike us into a recession. That's usually the case every single time with the Federal Reserve. But again, you need to understand and embrace it. We still like the banks long term. I think the banks are very undervalued here. That's probably my favorite that's been beaten up. So again, I like the banks with rates going up. Remember, rates going up is good for banks because they make a difference in the spread between what they borrow and what they lend. Remember, they borrow at short term, which is 2%, and they lend at 10% yields. So again, as long as the yields go above 3.1%, I would love it to hit 4, but I think as you could see on a chart, it would just going to keep going up in regards to Federal Reserve rate. So if you want to bring up a Fed funds rate chart, you can actually have a little perspective here. And then I could just bring up a Federal Reserve 62-year rate, and you could see we're barely cracking the federal funds rate here, guys. If you could see my screen, I mean, we're not in the 80s or the 20%. So again, we're getting back up to a good normalization of rates. So again, embrace it. Don't be scared of it. Best stocks to hold long-term. Why? Salama, we did a podcast on that. Take a look at that. I can't go over 10 stocks with you right now. Ben, why are you supposed to Robinhood? I'm not opposed to it. If you want to have Robinhood with a couple of stocks, that's fine. For options trading, it's complete garbage. If you want to go ahead and buy your stake at a dollar store, that's fine. That's up to you. But again, nothing cheap is worth it. It's not going to be good. Their platform for options is horrendous. And how do I know this? Because I have traders that trade on it. It's terrible. Execution is terrible. Pricing is terrible. Just because it's free doesn't mean that the pricing is correct. Bid and ask may be wide. The prices of the premiums may be higher. They're going to make money one way or another. Nothing in this life is free, guys. Be smart. You have Facebook, right? It's free. They sell your data to advertisers. Nothing is free. Be smart, guys. If you want to go cheap on your trading, by all means, you're free to do whatever the hell you want. I can't recommend it with good conscience that you have Robinhood, which is a free platform. Again, you get TD Ameritrade has the best trading platform, period. The only other platform I would say in order to research stuff would be Bloomberg. But TD Ameritrade, you have everything. What do you think? They're gonna have it for free? Why? Just because you want it free? Come on, guys. This is a business. This is a capitalism. This isn't socialism. You're not gonna get whatever you want for free. It doesn't work like that. So again, I ask you, why Robinhood? Because it's free? If price is that important to you, then maybe you don't take trading seriously, if that's the case. And maybe it's just a hobby to you. If that's the case, stick with Robinhood and do whatever makes you happy. But I can, in good conscience, recommend Robinhood options trading to anybody because it's complete garbage. Now, again, if you want to invest stocks in it, by all means, go for it. Again, if you have a small account, keep Robinhood. That's fine. Again, if you are a little more advanced, if you are really taking your trading seriously, then you need to go with a serious broker. If you want to just play around and mess around and you don't care and it's a hobby, stick with Robinhood and do whatever the hell you want. Again, it's just advice. You can do whatever you like, guys. I can't hit the button for you. I always tell my guys that. Good questions. But looking at the federal funds rate, guys, we're just getting back to normalization here. You can see that we're getting back to normalization. So again, I don't want you guys to think that we're going to get near a recession here. We're not even at 4% federal funds rate. That's the rate that the banks are overnight borrowing from the Federal Reserve. Okay, we're far removed from 1981 and the Carter years with the runaway inflation. You see where we're at on this chart. So again, embrace it. How do you embrace these kind of plays? Dividend stocks, number one. Number two, the banks. Very undervalued, guys. Very undervalued. I like it personally. So again, if you want to look at a sector that you can probably make some really good money on, again, for some growth and some good dividend yields, look at the XLF. This is the ETF for financials. And you could see nice little come up here, but basing out here, I still think we're going to hit 30 pretty closely. 27, it's coming. It's coming. But you can see on the daily chart, again, we're going to get back to it. I think we're going to get a nice little bounce. I like Bank of America. I like JP Morgan Chase. I like Citibank. Those are the ones I'd stick with. Good questions, everybody. Yeah, it's true, Charlie. They sell it. To be fair, TD Ameritrade also sells their orders to Citadel. But again, you're getting what you pay for in a sense. You're getting what you pay for. Understand that. If you go cheap, you're going to get cheap. So again, like I said, if you want to buy steak at a dollar store, be my guest. Personally, I'd rather go to a butcher and go get good food. Again, we take our trading serious. I hope you take your trading seriously too. It's just that simple. Good questions. Anyone else here? I guess it's going to be a quick one if no one wants to ask any questions. Quick webinar. I guess we answer as much as we can, huh? Thoughts on OI? OI, I'm assuming, is open interest? Just starting out. Where do I start? Starting out in what, Ben? Talk to me. Owens, Illinois. Okay, that's a stock. Let's take a look at OI. Oops, OI. All right, taking a look at a daily chart. Very bearish here. I don't know much about this company. I'm just going to go by the chart here. So daily chart, very bearish. And again, I would rather you wait for 21 to break before you get in, if anything. If you want to analyze this stock, let's take a look at OI here. Earnings per share minus 25%. Return on equity 190% negative. I'm looking at these numbers. These numbers are horrendous. No, I'd stay away from the stock. Why? Manufacturer of glass container products. I'm assuming you work for them because this is not a stock I've heard of. And a price to earnings ratio of 25 bucks when they're getting negative earnings per share. No thanks. Free cash flow, okay, 29 bucks, but minus EPS. What the hell's going on over here? I would stay away. Stay away from it like the plague. There's so many other companies you could be in materials. I'd rather you be in 3M, MMM instead. But yeah, no thanks. Next question. How do I start out? So that was Ben. I don't know. I don't know what you mean by starting out. You got to be a little more specific. Charlie, what do you think about DLR? Okay, DLR. Digital Realty Trust is a REIT. Okay, I like REITs. Earnings per share minus 22. Okay, but the stock is up. I'm assuming you're doing this for dividends. Let's see what the dividend yield is. 3.4%, 4.2. Well, again, when it comes to REITs, you're going to get a dividend yield no matter what, by law. Long-term debt by capital, again, when it comes to REITs, they're very leveraged. You got to understand that, but the profit is not great. I don't like it at all. A free cash flow, okay, 29%, but their EPS is down. Not a fan. Let's take a look at the chart here. Which was that website again? I mean, that was DLR. Oh, DLR, excuse me. Nice little drop here. It should have been just the dividend that was announced at about $1. I think there's other realty plays that I'd rather you be in, especially ones that you could trade for free on TD Ameritrade. There's some out there, guys, that are commission free. So if you go on TD commission free ETFs, and you can find some really good some REITs out there. I'd rather you be into that. Okay, so opening an account with 2K, look expand to grow. My friend sent me Robinhood and spent. If you have $2,000, Robinhood is probably your best bet. Stick with Robinhood. And again, anything under $30,000, SPY, S&P 500. That's simple. $2,000, you're not going to be diversified at all. Just stick with the SPY. Thoughts about wheat stocks, Canopy, Tilray. Tilray, stay away from its pump and dump. I've told you, I've said it again, Canopy. In CGC, they finally approved the investment from Constellation Brands. I don't know what they're to approve of money, but all good. Okay, next one. Ben, number one, penny stocks. You're going to get pennies. Be careful. Number two, $2,000 is nowhere near enough for you to day trade. Not even close. Stick with the S&P 500 fund. Start slow. If you want to invest that $2,000, invest in education. Period. Invest in learning on yourself. $2,000, you're not going to get your foot in the door with day trading. And I don't care who promised you anything because that's not the case. $2,000 is not enough to trade options or Forex, honestly. I mean, we'd love to have you on board, but it's just not enough capital. So I would rather you just invest into an SPY, which is the S&P 500 fund, have diversification of all the big stocks, and you work your way up, put some money into it, and earn your way enough to make more so you can trade if you want. But $2,000 is not enough. All right, any other questions here? Do you use Elliott Wave or Fibonacci for your trading? No. My Forex guys do. But yeah, our Forex guys do use Elliott Wave and Fibonacci. We do not use that for options. We do naked trading, naked charts. Again, your eyes are price action. Do you know who wrote the source code for the stock market? What? I don't know what that means. Can you briefly explain the trade war? The trade war, yeah, it's just between the United States fighting over the tariffs issue in regards to worldwide trade. Now, again, it is turning into a trade war, but what we're going to do, it's just what it is. Until there's a deal placed, it's going to be back and forth with that. If $2,000 is enough, what is 10K? Yeah, $10,000, you can trade options, no problem. When it comes to the trade war, you got to understand that other countries have trade plans or trade deals met, deal with taxes. They got to make money somehow, right? So again, the United States has been taking just a bath in, I guess, in everyone's opinion. They've been paying out too much and getting too little. So Donald Trump and the Republicans are saying no more. We're going to slap tariffs and make some money until they get a better deal. Like NAFTA. NAFTA was a bad deal for the United States, according to them. But again, stock markets are going to be affected that way because international trade, and of course, stock market does not like change. Are you still trading futures? Yes, we do trade futures. How many contracts do you use? Just depends. One or two. Depends on what we see. But again, if we're going to go ahead and just, scalp, we could do 3 contracts, but for the most part, it's 1 or 2. Is that for bankroll management? Yes. Keep in mind, if you trade 2 to 4%, that's the max we recommend. 2 to 4% in a $10,000 account, how much is that? $200 a contract, right? $400 a contract. That's all you can trade. For $1,000, what are you trading for 2 to 4%? $20 a contract? Good luck finding that. Again, if you got to think about what you're going to be trading. $10,000, okay, but you're going to make X amount of profit because it's all exponential. Be smart. Why do you need so much capital? Can you trade your way to your capital? Again, if you made 20% on $1,000, how much is that? $200? Is that going to change your life? You need to be very, very consistent in order to bring that up. It's just not a lot, not enough. Thoughts on VZ? Thoughts on VC, first to implement 5G and also credit card costs. To me, I like VZ. As long as their dividends up, I don't care. I like them. I like them long term. And again, if they're cutting costs, that's good for us as investors. It's the most expensive, expense, or the biggest expense is labor force. So if they're cutting, what does that tell you? Again, they're trying to scale back and make more profits. Again, as a person, I'm not a fan of it, but as an investor, that's what it is. Thoughts on Disney long term? I like the fact that they did not buy Sky. Again, that's $40 billion that Comcast spent for a British network. I'm pretty happy that Disney did not do that. I am not a shareholder of Disney, but again, Disney did the right thing here. Where do we trade S&Ps and futures? TD Ameritrade, Interactive Brokers. Definitely not doing that on Robinhood. Any other questions here? Okay, which is better, technical and fundamental analysis? They are one and the same. One and the same. It's kind of like losing weight. What's more important, diet or exercise? They're both very equal. How do candlesticks work? Okay, basically candlesticks do work on that. You have a candlestick here showing you the range between that time. So again, if we would bring up an hourly chart, this just shows you per hour the range of that actual stock price in between. What's the basic pattern you could show us? Basic pattern, like I said, is going to be just bearish or bullish. That's it. Looking here, we can start from the end to end. This is bullish. You want to look at a daily? Bullish. Again, basic stuff, guys. If you want to do this, all this craziness with the Momofuku, whatever the hell, butterfly ballerina pattern, guys, you're just trying to, how do I say this? To set yourself up where you're just paralysis by analysis. You don't need so many things. You don't need a million lines on the screen, guys, to be successful. Anyone who tells you that is just trying to show up. I promise you that. You don't need all that. Use what's in front of you. Use your eyes. Again, trade what you see, not what you think. Completely different. You look at all time frames. Again, it depends what we're trading. You got to be more specific with your question, guy. I don't know what you're looking at. I don't know what exactly you're talking about. I got to see exactly what time frame. Oh, so you're talking about futures now. Futures, you're scalping. So you got to be very, very careful. Very careful. You can see here on a 15-minute chart, this is live, and you can see here, we have to go tick by tick here. So again, your charting is not gonna help. You have to do level 2 for the most part. Yeah, just be a little more detailed because I'm not sure which one you're talking about. Thoughts about Netflix? Blue Apron is crap. Stay away from it. I can already tell you now. Look at the chart. It's garbage stock. Netflix, we like long term. I do like Netflix. I do think they're more of a media company more than a tech company now. So again, I do see that we're going to get to 400 very, very soon. It's coming back from the bottoms at 320, and I like it long term. Absolutely. Stick to it. Price target 400 short term. BJ IPO. I don't know what BJ is. BJ's Wholesale Club. I'd rather you just be in honesty in Costco print. I would stay away from BJ's. Rather you be in Costco instead. Where would someone go to be informed that IPOs coming up? Easy. Google Finance. Google Finance is your best bet. Teaching. Thank you, Charlie. Nike long term. I'm looking at it. I like what they're doing right now long term. I think they are going to grow a little more. A little bit of a hit here. I said to the group that we were going to have a run up until earnings, and then it fell. That's exactly what I thought. I still think here is to buy long term. I still like $90 as a target. Bernanke says 2020 is the target for another recession. What are your thoughts? I've gotten that question all the time. Why does everyone have this obsession with the market falling? And people have been saying it now for 6 years. The market's going to tank, nothing's happened. So instead of saying when the recession's going to come, why don't you just maximize the opportunity now? So I'm not going to answer that question because it's a stupid question. Why don't you just maximize and profit for the opportunity now? And then when it comes, you take advantage of that. Be smart instead. Are you still holding Ripple long term? Absolutely. Holding Ripple long term. Cool. No problem. All right, guys. Not much questions right now going on. So not seeing it. Why Ripple long term? I still think that utility there for cryptocurrency for Ripple, especially with banks, I think they are going to be the ones that take over. I still like Bitcoin, I still like Ethereum, and I still like Ripple long term. Carlos, what's the best amount of investment for likes of Betterment? I don't know what Betterment is. Is that a broker? Do you think Bitcoin bottom this year? To me, it doesn't matter, to be honest with you. I mean, everyone again wants to catch the bottom. If you're an investment, what are you waiting for? Just get into it now. Waiting for the bottom is a stupid approach. Waiting for the top is a stupid approach. You're wasting time, and time you're not going to get back. What is the definition of short, long term? Short term for us in options is the same week. Long term is years, easily. Investment for me is long term. No other questions here? How do you get started? How do I get started with what? Gotta be more specific. Get started with what in particular? With trading. Number one, learn what you're doing. It's the first way to start. Course online. The link is on Instagram. I highly recommend that course. It's 13 chapters online, takes about 2 hours. You could break it up as much as you want, $50 off with the code Instagram2. But again, trading what? Ben, you're asking me, how do you get started on life? That's what it is. That's why I feel like you're asking me. That's a very, very vague question. All right, guys. Well, I have a class here in a little bit, so we're going to end this call. Great stuff, guys. I appreciate you guys as always. We're going to have our stock valuation on Saturday. I will be out of town on Sunday, so no podcast on Sunday. Just a heads up, no podcast. I'll make an alert. How did you get to started trading? Easily. You know how much I started with trading? I started with $100 and saved my way up. That's all I did. $100, saved my way up. Then I got 3 grand, traded Forex, I blew it up. The next one, I put 4 grand, traded Forex, blew that up. I saved 10 grand, put into options, I blew that up. So it cost me about, to learn education-wise, about, I don't know, $16,000, $15,000 in fuck-ups in order to learn this. Get used to it. That's the tuition I had to pay. $15,000 to get started. Very easy. And I hope you guys don't have to pay that, because that's the hard knocks life. Don't do it. Learn from our mistakes. That's why we have our signal service. That's why we have the podcast. That's why we have everything, every tool to help you guys. Because trust me, I have those on the end. Very, very difficult stuff. It's not easy to lose. I promise you that, but it will happen. But again, as always, appreciate you guys. Carlos Garcia, founder, CEO of GAR Capital. Really great webinar. We'll catch you guys for next week, and we'll see you soon.